Welcome to this week's Hot Stock Tips. I'm Philip Tortevski, Senior Analyst at Wealth Within. And joining me is Analyst Pedro Banales. Good morning, mate. How are you?
Morning. Yeah, good, mate. I should have wore a red tie today because that's what we're seeing in the market for the last couple of weeks, eh?
Yeah, we are. I mean, the market's been down now 3 weeks in a row, so I don't blame people if they're concerned what is happening. But, you know, so much volatility. Trump obviously coming out with the tariff.
That's the main theme.
You know, we are seeing heightened volatility. But to that point, there are still a lot of stocks going up, and I want to bring that up for you right now. So let's dive into the watch list of the top 200 ASX stocks. And on your screen now, you will see, and this is the part that gets me, is when you see an index falling away, most people think, okay, and you're hearing it in the news, you know, I mean, that's another big issue, that it's all positioned and put to you as doom and gloom.
Yeah.
But we're looking at the top 200 ASX watch list. And as I scroll my way down through the 200, look how much are green for the week. I mean, there is quite a lot. I'm still scrolling. There's about 30 or 40. Now, if I go and set this to monthly, you will also see, and it might take a little time to load, but you will also see that there are an overwhelming majority of stocks and big stocks, good stocks in the top 200 that are in the green. So when you look at an index and say that the index is falling away, don't be so quick to think that it's all doom and gloom. You will always find opportunities out there. Look, as I scroll through, there's so much. You'll always find stocks to trade and stocks to buy. It's only when you try to go down the route which has been so popular lately, which is that passive index ETF investing route.
That's right.
Where you're going to buy the index, and you know, although you think less work, easier to manage, not more volatile, well, hey, on the flip side, if it's going down, you're going to be losing. You don't have that opportunity to find stocks that are going to be going up or to counteract that. Yes, stocks take more work, but more work
equals more money, right?
More potential. Exactly. So let's get back to that watch list real quick and just go over what is strong at the moment. Obviously, West African Resources up 20%. We are seeing gold come through and resource players mainly. So keep an eye on that sector. It's also nice to see the materials ticking on up. Now, if I flip the script, it's going to be no surprise, energy. Energy got slammed this week, and there are a lot of energy players coming down. Also, Zip as well. Hey, when stocks don't make money and people wonder why they end up having these capitulations, well, yeah, you got to think again at some point. What's it called? The hype or momentum play rather than backed by any valid
of course, speculation. Yeah,
speculation play. That's the word I'm trying to get at.
Definitely, yeah.
Will come to roost at some point, which we are seeing with a lot of stocks in our market.
Yeah, a lot of technology plays are like that. They usually run on speculation rather than their current earnings. So we did see technology 1% up, which was good, but again, that's not necessarily a reason to get back into them.
Well, coming off a 12% week fall previous week, I wouldn't say so. But anyway, moving on, what's hot in the market this week? Well, Orica stock ticker code ORI. Now, I want to speak about this one because obviously Orica is reporting today. Now, just to let everybody know, today is Friday. We're recording this as of the Thursday night closing prices because there's obviously the public holiday on the Monday. So just bear in mind that when you do look at the chart, it is based on the Thursday closing price data. Now, if we go back to the chart, obviously Orica is reporting today earnings. So it's going to be in for an interesting ride. But the reason I like it is because, hey, these earnings might just be the catalyst to send this one on another leg up, a strong leg up. And from what I read, they weren't too bad. So, you know, you've got a very nice wind or a catalyst behind this one that could potentially send it soaring. We've seen how strong $12.50 is, huge level of support. It's bounced here all the way back from 2005. That's how strong it's been. More recently in 2022, we do have this momentum line trailing the stock up. And I've got 2 through there. So now we're accelerating in terms of rate of rise. If we start to find a high, as you can see this month, we've already bounced from that previous level. And have a look at the way this has unfolded. We've basically had from May to November, so that's 5 months or 6 months upside. We've almost have double the amount of seller activity. They've only managed to claw it back half of what the buyers have managed to do. So effort versus reward. Sellers have had a lot of time, a lot of effort to push the market lower. They've only been able to claw off half of what's happened from November 23.
And a lot of reversal bars in between as well, closing higher than the open.
Yes, we're touching an accelerated move or accelerated trend on the way up. So that is a positive sign, is if the trend does begin to accelerate. We do have this trend line down or momentum line down on the downside that we're starting to gravitate towards, not really fall away from like we saw throughout this period here. And that is an important sign too. In previous occasions, look how sharp the moves down have been once it got touching the momentum line.
Yes.
This is different.
Yeah.
This is gravitating towards there, sticking, saying, hey, I actually want to go higher, not lower. So that, to me, is why this is such an interesting stock to look at right now. And again, as I said, in light of the news that is about to come today, that could be the catalyst. But before we get to that news, hello.
That's the elephant in the room right there, isn't it?
We have had volume come into this one. So there has been a big player or multiple players come in right in
and
the
it's
last...
not because they know anything about the report, right?
No, Pedro, don't be a conspiracy theorist, mate.
It's definitely not any type of that thing
It's
going on.
just opportune time to get in before reporting period. But anyway, look, it could dump on the report. So, I mean, we're yet to find out. But it is such a huge eye-opening thing to realise, hey, this is basically 4 times the amount of maximum volume that has come into this stock. I mean, look, the previous times we saw huge volume was around in March 01 and then November 2001, which basically coincided with a very important turnaround.
Took off.
The strongest bull run it had was based on the biggest volume.
Yep.
Now we're basically seeing that repeat. So I would be saying, if you're not watching this stock, watch this stock very, very closely. Because we, as I said, I don't want to harp on it, but we've got the catalyst.
Yep.
And we've got exorbitant amount of volume coming in prior to the catalyst.
Yep.
And we can show you from a trending perspective, it's a bit more bullish than bearish right now.
That to me is an important factor, that previous uptrend. So you're not speculating on this, this longer term downtrend that it's had, and then seeing volume come into this and thinking, okay, well, is this the end of the run? We've actually got a nice prevailing uptrend and then a little bit of a correction happening and now volume coming into it. So this could be a bit of a counter trend move as it moves to the upside. So, I like this one. I'll definitely keep an eye on that.
You like it? Good job.
Good job. And I, we're yet to see, because like you said, it could tank on the news at the same time, but the price action will tell us everything.
Yeah, absolutely. All right, now we're moving on to a stock that should make you trade with caution. IFL Limited, stock ticker code IFL. Now, the reason I want to bring this one up is, again, it is very timely that we are looking at IFL because today there has been a proposed takeover bid for IFL at $5. Now, the stock's up today about 11% so far. It's trading at around $4.70. But I wanted to, raise this point because, again, clearly one of those examples where no one knew that there was the potential for this to come out in absolute free fall. And in January 24, it just reverses and gives one of its strongest runs it's had in, basically since August 19. But anyway.
On high volume as well, so a lot of participants in there.
Yeah, on big volume relative to normal. Yeah, anyway. So let's not harp on that point. But right now, it's one of those stocks that you do need to look at and I guess from a decision point of view, knowing this is overhanging, now it may or it may not go through. It's just a proposal at this stage.
Because it's non-binding, right?
Yes.
Yep.
So it is a proposal at this point. But if the price is $5 and we're trading at around $4.70 right now, as a trader, are you looking at this and thinking, okay, I want to get involved? Or are you waiting and going, well, if it's $5, we're so close to that level right now, it's probably more risk on, 5% potential relative to what could happen if on the flip side it doesn't and the market reacts negatively to that.
For sure.
Just bear in mind that whole scenario. Now, if you are holding this stock, well, potentially it's time to make a decision.
Yeah, definitely. And if you're not in it, I'd be staying out of it definitely, because we've got this huge gap on the weekly as well that it could come back to. And like you said, you've only got 5% to that $5. So why would you want to get involved at this stage?
Yeah.
So many things can happen. that the proposal doesn't go through, it gets rejected. Now, if it gets rejected and they think that the value is even higher, well, of course, that could bode well for the company. But you don't trade on those types of things.
Well, no one's holding a gun to your head. You don't need to get involved now.
Yeah, that's right.
That's the point you're trying to make, is that, hey, there is, risk in markets inherently when you're investing and trading. Try and eliminate the majority of that risk by knowing where you're playing, breaking down, dissecting these, announcements and then looking at a chart. Look at that chart. The real opportunity, I would argue, and I think you would be the same, happened many months ago.
Yeah, for sure.
And,
yeah, there was good indication that this stock was actually starting to take off on the chart many months ago. And then we did see that sustained uptrend. And I'll show what I mean. So we had that bottoming pattern here. And then it was actually consistently making higher highs and higher lows. And we started to see more volume coming into it. So you could have even got in around that $3 mark. So if that was the case, then you would have been in a nice 60, 70% profit here.
But right now,
it's a little bit late. There's too much speculation around it. I totally agree. Caution. If you are in it, now that's the question, right? If you are in it, do you sell now or do you wait for the proposal?
Again, it's it's individual. It's individual. It's what portfolio is this in for you? Is it a trading stock?
Yeah.
What's your style? Do you generally get in and out? Are you looking long-term perspective? Is it more a fundamental play? Are you buying the story?
Exactly.
You got to answer all these questions, and if you can do that, then that'll basically direct you towards what kind of play you should make. But as we mentioned, it's to highlight that it is a caution right now. So keep a very close eye on that one. Now, lastly, what's not hot in the stock market this week? Well, CBA stock, ticker code CBA. Now, before we get into the charts, I want to bring something up here, Pedro, and I know you're going to bring it up, is basically, I recently came across some news about CBA that it is basically today on Bloomberg, analysts calling it as one of the most expensive banks in the world in terms of its share price and valuation.
Big surprise, huh?
Yeah, I mean, no surprise. But we had CBA as a hot stock 3 or 4 weeks ago, but we did very much specify that it was a trading opportunity.
Yes.
A short-term opportunity, 2 to 3 months maybe. But we also had that very real concern that it looks very stretched relative to valuations and also stretched in terms of the way the price is. Moving relative to history. And so I want to go to this article, if we can bring it up on the screen and have a look and maybe go through it really quickly.
So on your screen, we can see this is from Yahoo Finance, but it was originally from Bloomberg. CBA tipped for the worst return potential among global bank stocks. So they are tipped for the worst return because CBA is now vying for the title of world's most expensive developed market bank at levels it's been historically unable to sustain. So historically unable to sustain. That's quite interesting. So they obviously this is fundamental analysis. They've looked at historical valuations and so on, and it can't sustain it.
Well, and price, because they've noticed, when price gets way out of kilter, I mean, we're talking about systematically one of the most expensive banks in the world. And so let's go to the chart actually and have a look now, because the beautiful thing about what we do and trading and looking at charts is that you're able to pivot. The key of a trader or an investor, to me, more important than, you buy a stock and you set a stop loss and you say, well, following an initial stop loss, to me, is relatively easy. Because it doesn't take rocket science. The real skill is identifying as the stock unfolds 1 week, 2 weeks, if you do like it, at the earliest possible time, the moment where you can flip on a pivot and say, you know what? This has changed.
That's it.
The dynamics have changed for this one from the price percentage. I'm not even worrying about that initial stop loss. I'm getting out or I'm completely avoiding this stock. That's the real skill, because it's going to protect you capital-wise. It's going to make you keep more if you are wrong, not have to wait for the whole stop. But at the same time, it works also on the flip side. A stock that doesn't look good then starts to look good. So when we look at the chart of Commonwealth Bank, to me, this scenario is right now what I'm referring.
And to add to that, actually, that's the actually advantage of being a retail trader, right? That you can pivot on a whim.
Yes.
Whereas, if you are those large institutions, they take a little bit longer to sell out of their positions. Well, and that's how we can identify these patterns.
Yeah, great point, mate. And exactly so last week we were looking at it and thinking, okay, buyers go on with this as potentially a short-term trade to the all-time high. Well, guess what? They haven't. So when you're looking at it now, it's been another big reversal. And what you often find is generally markets unfolding this 1, 2, 3 wave move down. Now, if we break through this trend line here this week and take out the low of February 28th, I think we're going to get another leg down. A very real possibility we're going to get another leg down. And what I have also drawn are some of these price percentage tools. And what you'll find is that as we go along, generally what could happen in terms of a fall for CBA is that it's not uncommon once we get one of those breaks of the trend lines or the momentum lines and start to get these ABC legs down, that it is not uncommon. We're talking about a big stock here, but 44% move, 60% move, and also back here we had a 30-odd% move. But why I'm measuring these moves is because it is following big runs up like we're seeing. And we right now have had the biggest run in terms of rise relative to history. And that's why I agree with this article. Right now, you can also see since the start of the run, volume has just been consistently dwindling away.
Yep.
And as this, dynamic continues to unfold, you start to paint CBA in a picture that, hey, it does look expensive here. And, another leg down. From a
technical perspective, definitely, it's overheated.
And if we apply, I've gone through the horizontal there, but if we apply another momentum line through here, because the question now is, okay, where could it get to? Well, 45% historically is the, big level you would watch out for, but it could potentially find support earlier. And I would argue if it's just a 1, 2, 3 move as we've seen, they can either be 3, 5 or 7, but a 3 move down, we're probably looking down to around 140. And if we try to measure that with all of the analysis and imply some horizontal levels of support and resistance, well, we're probably talking somewhere through here.
Yeah, I wouldn't expect this stock to fall that 45%, especially if we looking for our market to trade higher, right?
Well, long-term,
this is going to be one of the ones to move the market.
I don't know. See, I don't know about that. I think long-term, the way this is, I'm always the advocate of what goes up must come down.
Yeah.
And if it's not the banks that are going to fuel the market, it's probably going to be the materials sector.
It's about time if they do. Yeah.
Right? Materials and energy. You might really see a huge shift in terms of capital flows outside of banking into materials and energy.
That's a good point.
In light of what we are seeing with the policies globally with Trump, obviously the tariffs, they affect those markets a hell of a lot more than financials, even though financials is affected everywhere, right? But where the value is, where's the value right now?
It's definitely not in CBA. There's going to be a sector rotation happening for
potentially.
Sure. But Australia is basically just a miner and a bank. So we're really relying on these sectors to move it. Yeah.
And to that point, rather than just speak doom and gloom, per se, as technical analysts, we got to get through speed humps first before we start talking big picture.
Yes.
And if we go back to that chart, you'll see what we have marked in terms of that level. I would say this is what you need to watch, 140.
Yep.
140, if it holds 140, then hey, potentially we've had our pullback. In light of the market also having a 10-15% pullback, that's going to take it to about 20%. 20% generally, what they say on the market is a correction.
Yeah.
And so once you get to 20%, it might start attracting some value there.
Yes.
It really needs to have significant further issues potentially reported. I don't know if this one's reported yet.
This one has reported, and they've reported positively again. Yeah.
So it might have to be some fundamental breakdown to see that bigger move. But hey, going through history, it has happened before. So
exactly, yeah.
Right now the beautiful thing with technical analysis is that you can watch on the sidelines, mark your levels on the chart until it turns and makes that positive higher high, higher low type scenario, more buyer sentiment than sellers. Then you can get it back involved. So that's the beautiful thing of waiting and watching price action. But anyway, if you want more hot stock tips, check out our video on mineral resources, Qantas and WiseTech, or you can check out our live show on the top 5 ETFs to buy. Now, just before we go, I want to thank Pedro for his amazing comments as always today, mate. Thank you.
My pleasure. Yeah, let's see what the week holds, eh?
Let's see. All right. Well, thank you everybody for watching for now. Goodbye, good luck, and good trading.